the town of Ladoga. And then fire personnel as is set up in the legal documents. So one of those units has to act as what is termed a provider unit, meaning that unit will be sort of the home of the territory. In this case, that's going to be Clark Township. So Clark Township will be responsible for bringing in the tax levy. They will be responsible for making payments out and supporting the fire department. And actually, the township board is the one each year during the Indiana budget process that will approve the budget for the fire territory. The board will recommend the budget to the township, but as its role of provider unit, the township board approves that fire territory budget ultimately to get it through the approval process at the Department of Local Government Finance. That doesn't necessarily have to be permanent. If in 2 or 3 years things have changed, the boards are made up of different people, different responsibilities, and the town wants to take that responsibility, you can vote on that at the beginning of the year, it can be shifted. But for the time being, to get things going, it's definitely, and it may well be for perpetuity, the township. So as Amy talked about too, the lack of funding and where the levy for the township has been over this time. So going forward, after you get this sort of one shot to reset your levy, there's no process like this for other township or town functions. The police department can't do this, the county sheriff can't do this. It's only for units that provide fire across the state that get this ability to come together to sort of consolidate on that service, set a new levy, and establish a uniform rate for provision of fire service across the participating units. Going forward, the levy will grow again by that small 2 to 4% that she mentioned each year. That's called the max levy growth quotient. It's defined at the state level, and it's applicable to all units across the state, whether you're a school in Lake County or you're a library down in Warwick County, you have the same max levy growth quotient each year. So moving on to page 6. It's on the comparison of funding. So this is the current funding in 2026 based upon the budgets that were submitted for both the township and the town. It's a combination of $106,500. Now, Amy gave you the So that big red chunk at the top on the left-hand side is the capital portion that the township receives. So they currently get about $35,000 in that capital portion. They get about $8,500 right now in the operating or your main fire levy. Now, with the territory, these amounts will be removed from their current levy and it will be replaced with the new amount for the fire territory. In a few pages, I'll show you how much that is and where the changes are that will occur because of that. So the town of Ladoga, they do not have a specific fire territory fund. Part of the contractual payment that they are paying to the township comes from their general fund. There's a general operating fund that towns get, whether that's to pay for the clerk treasurer's office or the public works. Every town's a little bit different what they use that for, but in Ladoga's case, a portion of it is going towards the contractual payment for fire. The town also receives certified shares local income tax and public safety local income tax. Local income tax are taxes on individuals' paychecks. They are assessed on a countywide basis and then distributed based upon relative proportion of levy to all levies in the county. So the township gets a very small amount of the certified shares, but they got enough other things that it gets spent on, but it doesn't even make it to fire. So the town has a slightly broader base of revenue by the fact that they have certified shares, and townships don't receive public safety lit at all. So the town is able to use a portion of their public safety lit to support the fire contract. On the next page, it shows what the current rates are that are funding fire. So that the top big blue bar for Ladoga, that's the relative proportion of their general fund levy that is going towards the part of their contractual payment for fire. So of their total levy in their general fund, next year, if this passes and everything goes forward, this 7 3/4 cents, it's per $100 of net assessed valuation, will be removed from the tax rate for citizens that live in Ladoga, and it will be replaced with the new rate for fire. In Clark Township, that small fire levy they have, plus the capital portion, is a little over 4 cents per $100 of net assessed valuation. So that part would be removed from the current levy for the individuals that live in the unincorporated portion, meaning not the town of Ladoga, everything around the town of Ladoga that's in Clark Township. So those are the amounts that will be replaced going forward. The next page, page 8, covers the proposed fire territory budget, and this is just for operating. The territory will also have that cumulative fund that's available for capital purchases only, but only certain things can be used to take into account for the new operating levy that's calculated. And the items that Amy has here fall into that classification. You have volunteer staffing, you have general supplies that are necessary to run the department, then things like truck maintenance, building maintenance, those scuba packs that she talked about, scuba maintenance, those things are included in that budget as well. So the new budget going forward is $294,500. On page 9, we've used that amount to come up with what we can consider would be your budget for the incoming year, and how we get to the tax rate for the provision of fire service. So for the operating levy, that $294,000 budget that I just mentioned, which also in the first year of the territory, they are allowed to accrue a cash reserve. Otherwise, there would not be anything left over. So we are looking at a 15 or 10% cash reserve for the town. Sometimes, things happen that you have a plan for that may not be in the budget, and if there's nothing available, you may not be able to address a situation. So that's why there's a little bit extra levy that first year, because of that accrual that they're eligible for through the statute. So that first year, 2027, the operating levy would be about $322,500. Now that second capital piece, that is held to a specific rate. It can't be more than 3 1/3 cents, and we apply that to the net assessed value of the combination of the township and the town. So it basically ends up being the full township assessed value. The levy for that would be about $47,500. And there will be circuit breaker loss. And we say circuit breaker and other tax credits because, as Amy referenced, SEA 1, or Senate Enrolled Act 1, has created new tax credits in addition to the already in place deductions that are on properties within both of these units, these taxing units. So there will be some property tax loss due to caps. In a few slides, I talk more about circuit breaker loss and what that cap loss means. But each year there will be a loss in addition to what we've calculated here already. There's go down a couple lines. It says vehicle excise tax. Now, already in place, has been for years across the state, if a unit receives property taxes, they also get their relative proportion of the share of motor vehicle taxes. When you go to the license branch and put plates on your car or your boat or your business vehicle or your airplane, if you have an airplane, a portion of those taxes are returned to taxing units. Forming a fire territory doesn't mean that it's going to make your taxes on your vehicle anymore. That's not the case. Those taxes are what they are. It just distributes portions of those taxes to individual taxing units. So the fire territory will receive a portion of those taxes going forward. Currently, the township gets them and the town gets them. So there will be somewhat of a shift across the county because you're creating a new unit. You're creating a new unit that's eligible to get that tax. So the vehicle excise taxes would be about $18,500 next year. And then the total budget, if you take into account, full operating budget, that means the 294 that she said they're going to spend, plus that reserve that you can have, is 300, plus the capital equipment fund, what you could spend, total, would be $388,550. We then look at the property tax levy, divide that by the net assessed value, and we come up with a rate of 0.2593 to support the fire territory in 2027. The calculations for the next 2 years are the same, except that there is no accrued cash reserve in 2028, 2028, 2029. So for the next 2 years, that rate will drop a little bit the second year of the territory from 0.2593 to 0.2236 because they're not levying for that additional reserve. And then it even looks like, based upon potential net assessed values, it could be 0.2191, you can go down a little bit more the third year. Now granted, these are estimates for the second and third year. We don't know specifically what assessed values will be next year. But in this case, except for the first year with the levy necessary to support the budget, then going forward, it will grow by the 4% and not more than that. The next slide briefly covers debt service. We don't need to have an in-depth discussion because neither unit currently has any debt service that supports fire, nor are there any plans in the future for debt service in support of any fire, whether it's a truck or a building or anything like that. If there are, and if it ever comes to that in the future and you need to have some sort of debt, the territory itself cannot issue debt. So it would be up to either one and or both in concert of the participating units levying that debt. Again, no plans to do that, but it would not be a full flat rate across everyone. It would be based upon where you live in just one unit or the other. So if we go on then to page 12, here's where we see how this fire territory will roughly change current tax bills. So if we look at the left-hand column for Clark Township, the estimated tax rate for 2026, and this is a district tax rate. This rate is not just for fire. This is a district rate. This includes Montgomery County, it includes school, it includes library. It's all those different taxing units rates together combined into a district rate of 1.5773. This is technically the 2025 rate because we're at that bad part of the year where we don't have the 2026 rates yet. But this is a very reasonable estimate for what we believe that 2026 would be. So as I mentioned before, we take out the current rate for fire, which is the 0.0414 for Clark Township only. And then we add back in 0.2593. So that would be an increase in the rate of a net increase of 0.2179 for a total of 1.7952 in 2027. That's about a 13.81% increase. Keep that percentage number in mind, and I'll explain why when we start looking at changes to tax bills specifically. So now the town of Ladoga currently has a slightly higher tax rate at 2.4430. They also had a currently higher rate being used for fire of 0.0775. So if we take that out, add back in the 0.2593, Ladoga's bill tax rate would increase by a little over 18 cents, 0.1818, with an estimated district tax rate of 2.6248 or 7.44%. So on the next page, we go a little bit past that initial 2027 year, the 13.8 and the 7.4. Remember how I talked about they're not going to levy quite as much years 2 and 3. So the increase will be in 2027, and from then on it would decrease and likely remain relatively flat for fire going forward. In this report, we have tried to narrow down and isolate just the effects of fire. Are there other things that could impact your tax bills? Yes, there definitely are, but we don't know what all those are. We don't know what the county's planning on doing. We don't know if there are other units that are looking at a fire territory. We don't even know exactly how everything's going to play out for sure with that Senate Enrolled Act 1. So we've tried to, as much as possible, isolate what will happen with the fire territory itself. So, then on to the next page, which is page 15. I'm trying to give some examples here of what might happen to tax bills for a specific home value. Through some research on the internet, it seems that they said in Montgomery County, average home cost is $228,000. Obviously, some of you may have homes tax value of less than that. There may be tax value of more than that. So that's why I'm saying pay attention to those, remember those percentages, that 13.8 if you live in Clark Township and 7.4 if you live in Ladoga. Because if you have a home value other than one of the three that I'm showing here, you can multiply your 2026 tax bill by that percentage, or take it times 1.138 if you live in Clark Township in the unincorporated portion, and that would give you a likely idea of what your tax bill would look like because of the fire territory. So in this case, if your property tax, if your home, value of your home is $150,000, and you live in Clark Township, because of the fire territory, your bill could increase by approximately $93 a year. That's about $7.75 a month. We give you the monthly amount because most people, or some people anyway, have mortgages on their home, and that's what would change that as that monthly escrow payment. Whereas if you live in Ladoga, the total change would be about $78 or almost $6.50 a month. That's kind of in that peach color, that first block section with $150,000 at the top. If your home is at that average or near that midpoint at $228,000, because of the fire territory, your bill could increase about $165 over the year. That's a little less than $14 a month. If you're in Clark Township, in Ladoga, it would be about $136, almost $137 for the year, and a little over $11 a month. Then for a $300,000 home, the total increase would be about $230 for the year. If you're in Clark Township, and about $192 a year if you live in Ladoga. And currently, we assume that none of the properties that are in Clark Township, because your current rate, and even the rate with fire territory is, or compared to other rates in the state, is fairly low. So most of your properties are not hitting their property tax caps currently. There are homes in Ladoga that will currently hit their property tax caps, but it's quite a high bar at about $750,000. So the next page shows for Clark Township how that rate breakdown changes. We're looking at specifically the $228,000 home. So that we give you a pie chart there, that all the different pieces of the current district property tax bills on a $228,000 home in the township. So that big purple wedge is the South Montgomery schools. That's where most of the property taxes that are paid by township residents go to the school. There's a light blue wedge there for the Ladoga Public Library, a brighter blue section where that goes to Montgomery County. Then there's a small an orange wedge that you can barely see that's the rest of what Clark Township provides by way of township assistance and other township services outside of fire. And then the current, in 2026, the current amount paid out of your tax bill total for fire is about $31. If you look at the pie chart then on the other side of the page, all that's happened is that the fire service pie wedge got bigger. The other ones have stayed the same, but fire went from from 31 to about 195. That's the full $164 that I quoted on the previous page. It's going to increase. So it's going to change the amount that's coming to fire. And next we have the same pie chart for Ladoga. The difference is Ladoga has a purple wedge there that's for the town of Ladoga. So if you live in the unincorporated township, none of your property tax money is going to the town. However, that's why the rate is bigger for the individuals in the town, because they have the town unit portion also of their tax bill. But in this case, in town, your fire service, because you're paying different rates currently, you're paying $58 in town, but when you go to the territory, it's going to be the same $195 that's in the township. That's where we're putting that uniform rate for the fire service portion of your tax bill in place. So in this case, it's $137 difference, and that's the full amount that was listed on the previous page. Now, of course, there are other types of properties besides homes in the town and the township. So the next page is to give us an idea of what some other types of properties tax changes would look like. So we have a $100,000 piece of agricultural property, and we have a $200,000 residential rental property. So that's not your primary home. That would be a rental home, apartments, assisted living facility, a lake home, a vacation home, something like that. That's a second, but it's virtually the same type of property as the agricultural. So whether your agricultural is worth 200,000 or your residential's worth 200,000, there's maybe some small differences, but they're going to be very much equivalent price-wise. So if you're in Clark Township, whereas again, as I mentioned, nothing is currently hitting tax rates or tax caps. That $100,000 piece of property would have an increase of about $206 a year for the fire, because of the fire territory. Another way to think about that, again, you've got that 13.8%. If you have a piece of ag land that's $500,000, you take your total bill for the ag part times the 1.138 and come up with roughly the new amount. Or if it's a kind of an even, like say $500,000, you can take that $206 times 5. Comparing 100,000 to 500,000. Then for the if it's $200,000 piece of property, about $412 a year, or $34 per month. And a commercial property is even a different tax classification. But in that case, a $500,000 piece would be about $84 a month, or an additional $1,030 a year on a $500,000 piece of commercial property, due specifically to the fire territory. Now for the Ladoga line, you see some zeros. Because in general, if your tax rate is more than $2, you hit the tax cap for the 2% tax cap properties. So your tax rate is currently over 2, and it will remain over 2 with the fire territory. So if there's anything in town classified as agricultural, I would feeling more likely to be classified as a rental property. Those properties' tax bills would not change because of the territory. There's an increase to that circuit breaker loss that I mentioned earlier, and that's what makes up some of the additional loss and some of the gap there. But there's no actual change in revenue or change in the bill that you're paying on those type of properties because of the territory. If there's a commercial property in town, there would be a change, and that would be about almost $72 a month, then up to $860 for the year, again, on that $500,000 piece of commercial property. So the other thing that the statute says we have to discuss is how the fire territory will change overlapping units, meaning other units in the county, how it will affect their revenues. Because as I mentioned, you have district rates, so an individual property taxes that they pay don't just go to one unit, they go to multiple units, and what changes in one affects the others. And even what changes in one can affect all of the others in the county. So the first thing we'll talk about briefly are the property tax caps and how this could change circuit breaker. So I mentioned there's those what we call 1% of residential homestead properties. That's your primary place of residence and up to or including roughly 1 acre of land. There are some exceptions that make it more than 1 acre, but for the most part, the standard rule is 1. So on those types of properties, your tax bill cannot be more than 1% of the gross assessed value. So if you look at your tax bill and it says that the taxable value of your property is $100,000, your tax bill, with a few exceptions, will not be more than $1,000. The exceptions I'm referencing are if there's any debt that's been voted in a general election that generally applies to schools. And I don't believe in this case either one of those units had any school debt, so that you don't need to worry about that exception. So in general, you are paying 1% of your assessed value on your home. There could be other deductions, like if you're over 65, blind and disabled, hard or deaf, there are certain other deductions that can be put in place. But in general, it's 1% cap. And then those other types of property I talked about, the 2% being other residentials, rental, ag land, or long-term care facilities, they're maxed at 2%. Their tax bills are no more than 2% of their assessed value. So if you're, again, that piece of ag property that we talked about that was worth $100,000, that tax bill won't be more than $2,000 because of the caps. And similarly, for a 3% property, the commercial, a $100,000 piece of commercial property would not be more than $3,000 for that tax bill. So what happens with those circuit breaker credits is even if the bill comes out calculating more than that, that's all the homeowner pays, that's all the taxing units collect. So the difference between those are what we call the circuit breaker loss. So if based upon your property value and your property tax rate, your tax bill calculation, say you have that $100,000 home, and you lived in the city of Ladoga where the tax rate's higher, and this number's not going to be exact, but if your bill calculates out to $1,800, remember the most you're going to pay is $1,000 on $100,000 assessed value. So that $800 is called cap loss, circuit breaker cap loss. And it's spread out amongst each of the units that make up the district rate on that property. So the next 2 pages show changes in circuit breaker because of the fire territory. I've highlighted Clark Township, I've highlighted a line for the fire territory, and then a line for the town of Ladoga. And I will say I mentioned earlier, we tried to keep the effects, just the impacts of the fire territory. But there are impacts here that are due to the changes from SEA 1. If you look at 2028 and forward, you'll see some units, not necessarily your units, but City of Crawfordsville, the county, and Crawfordsville schools, circuit breaker goes up a lot. That's not because of the fire territory. That part is because of Senate Enrolled Act 1. There are some shifts in yours. For example, if you look, Clark Township currently only loses about $700 because of circuit breaker. Adding in the territory, they would have had more loss anyway, whether it was with the territory or not. There would have been more circuit breaker loss, and you already didn't have much levy to start with. So this, by doing the fire territory, was the option they had to get more revenue because they were just going to continue to lose revenue. So there will be some circuit breaker there, and they will still have some circuit breaker on their other levy as well. Now, the town of Ladoga, that impact in 2028 is because of SEA 1, not because of the fire territory. The change between 2027 and the pink columns without the territory and the blue column with the territory for 27, that is because of the fire territory. But the other ones are because of SEA 1. The next page, like I said, there's none of your units are there. That includes some of those, like I said, the school and the other units and the other changes and impacts. The other thing that can be affected is the local income tax that I mentioned, certified shares and public safety. The county currently sets that rate for all units in the county, and it's assessed on the paychecks or adjusted gross income of all of the individuals in the county, and then distributed based upon the rates and the formulas that the county has adopted and that the state allows. So there's a list there in the middle of what your current local income tax rate is. The county currently levies a 1% rate of local income tax, a 0.95% rate for public safety, and then something called property tax relief, PTRC. So certified shares goes to the county, all municipal units, townships, and libraries currently. There's not a part that's going to the schools currently. Public safety goes only to the county and the cities and towns. So that's what I mentioned. Clark Township is not receiving any of the public safety lit. They're only receiving some of that 1% certified shares. And then property tax relief affects everybody in the county. That means using local income tax to try to lessen the impact of circuit breaker across the county. And it's because of that the big change comes into Crawfordsville and to the county and to Crawfordsville schools in 2028. Because under the current, what was adopted last year in SEA 1, the property tax replacement portion goes away at the end of 27 because an entirely new structure for lit comes in 2028, which is sort of explained on the next page. Some of the changes. So basically, if you had formed a fire territory last year, your lit would be changed next year because of changes in levy this year. All the changes due to lit are a year behind. But because you are adopting a fire territory now, nothing that happens with the territory will impact lit. There's a whole new set of rates to be adopted. Previously, it was just the county, now it's the county, now it's Crawfordsville. It's different units can adopt their own rates going forward. The county can also decide in the future to adopt a fire and EMS lit. So there's a potential down the road, and after 2028, there may be some additional revenue for fire if the county adopts any or all up to a 0.4% rate. And that would be again across the whole county. So we don't know that right now because I'm sure the county isn't even thinking about it, let alone enough to have anything to put on paper. But going forward, like I said, current lit structure is wiped out and the slate starts as of what we know right now, again, clean in 2028. There could be some changes in the current legislative session. It's going on right now. That's the other thing we have right now. Things could happen now or after your meetings are done that change something relative to the report here we have tonight. We don't know for sure how that'll work. So as far as local income tax, and the next page is local income tax and certified chairs. No changes based upon current 26. We assume 27 will be the same. And we're not making estimates for 28 or 29 because we don't know for sure what will happen. But nothing that happened with the fire territory will change local income tax. The last comparison we have is for the vehicle excise tax. Like I already mentioned, that goes to every unit in the state that receives property tax. So there will be some shifts there. I've again highlighted the line for Clark Township and the line for the fire territory and the line for Ladoga. So if you look under 2027, we're showing about 18,515 going to the township. It was the territory part that wasn't there before. So that 18,500 to give to them will sort of be divvied and pieced and parted out of all the other units across the county. So you can see the county loses about $5,000 potentially. Brown Township only loses about $36. Again, it's a relative distribution there. So the more levy you have, the more of the excess tax you get. So by increasing the levy for the fire territory, you're going to get a little bit more of those taxes towards the fire territory. So that is the end of the financial presentation. At this time, we'd like to open the floor for public comment. General instruction is if you want to ask a question or make a comment, come to the podium, your name, your address, and make your comment. Generally, are you giving a time limit? 3 minutes. Okay, so maybe I have 3 minutes. So I will step away.
No worries.
Podium lower. Sorry. No, that's all right. Easier. Anybody wants to?
You don't say something. Well, they're showing this for 2 years, so it's just the carry on, it's just adopted and go on and on.
Nice.
With, and I understand, so each doing project, and how hard it is money. My question is, when we had, I on part time, we had mutual aid, for several things. Is that still, do we still have that?
Reggie, I'll have Reggie.
Reggie, you want to expand on that a little bit?
Yeah, the mutual aid agreements will still continue, just like they are, yep.
Even if for some odd reason they're not as a fire territory and that we are.
Unless another town that we attach to for some reason ceases that operation, then yeah, everything will continue to operate as they continue to operate, yeah.
Okay.
Nothing will change on our side.
Okay, I worry about that, but you need mutual aid. Okay. And when we vote, we'll vote together or whatever. And once that happens, we'll know, when we vote on the last night.
Sure, so each entity, the township and the town have to adopt identical ordinances or resolutions. And so it's easier, they could do it separately, but most of the fire territory units that are coming together have these joint meetings so that they only have to do this 3 times as opposed to 6 times.
So there'll be the one adoption meeting, and you'll know
Yeah.
that, you can know that night, whether, because both of them have to adopt it.
Yes,
By
I
authority.
know, one or the
You're
other.
talking township and the
The
town.
town and town both have to adopt, and then that's local. After that, everything gets packaged up, all of the financial information, the sign-in sheets, the questions, all of that minutes from the meetings gets sent to the Department of Local Government Finance.
Right.
They give the final determination on whether the territory is formed, and then whether, if everything's gone well, and the dates were when they were supposed to be, and all of the ordinances are identical the way that they're supposed to be, then generally everything gets approved, and we know that usually during budget season, which is in the July, August, September timeframe.
Okay, so we may vote yes, but there's gonna be a little lag time.
Yeah.
Okay, so catch up, yeah.
Yeah, just because it has to go through the state
They
authority.
can vote for it from some odd reason or state.
Oh, we get that.
Yeah, that's kind of why Dan and I are here to help make sure that everything goes the way it's supposed to, and that none of the balls get dropped or anything like that.
Thank you.
Thank you.
Oh, you don't need to.
That's right. My name is Jake Cross, I live on Patriot Street here in town. And so I guess the question is, it's like townships, I really didn't know there was such a thing. Is it elected, appointed? It is elected. That's one concern I had, it's like, are we getting a new tax from an unelected official? So,
That's why only they can, because they're elected
that's right,
officials.
so that's one, yeah, I didn't know, that's one. One thing. And then, who then is in charge of divvying the money as it comes in? If we approve of it, how is that money distributed then to the fire department, and what levels of accountability do we have for how that money's spent?
So there will be a contract between the fire protection territory and the fire department, which will outline all of the
Who is the territory then, you say a contract?
the new board that is formed as a result of the 2 entities voting to
So
form a
is
fire
that
territory.
board formed of
Mhm.
town and solely of, or is there appointed members?
There are appointed members based on the town council and the township board, and then the trustee of the township
Mhm.
and the
Okay.
president of the council, and then there will be an appointed person who will be the fire chief, but he is a non-voting member. And then there is also an appointment from the fire department itself based on the election of their membership.
Okay, so based on who they appoint, we could have basically a board divvying out $300,000 if was never elected.
No,
Why don't you say they could?
they're not, but the fire territory board doesn't approve the budget or the spending of the money. That participating unit that I mentioned, would be the township, they're gonna be the provider. They're the provider unit. So the territory board recommends a budget to the township. The township board, who are all elected people, they're the ones that ultimately vote to approve the budget to be turned into the Department of Local Government Finance, and to then do the tax levy and the tax calculation.
Every year.
Yes, each and every year.
Okay.
Thank you, Jay. You 2 gentlemen in the middle have anything? No?
Not right now.
Fire department?
Close the public hearing, Lisa? Okay, close the public hearing. And we're gonna ask for a motion to adjourn the public.
I'll make a motion, we adjourn.
Okay, thank you everyone for coming.